It is 10:02. Oh, we're gonna start recording. Andy, do you wanna
Sure,
get
we'll
going?
kick it off.
Thank you.
Good morning, everyone. Andy Simon here in New York. I, last minute, was asked to fill in for Ed Delbacara, who apparently has a conflict this morning. So I'm going to fill in. I've sat in on a couple of these. I haven't run one before, so bear with me. I'll do my best Ed Delbacara impression. This is the investment sales Zoom session. We do a couple of these a year where members share some of their opportunities in their local markets to put out in front of the members, opportunities to buy or to sell. And we have a bunch of people who are going to present today. But before we do that, I'm just going to mention and remind everybody that within the website, we have a sales platform, an investment sales platform that is now active. We would encourage everybody to go to the site and become familiar with it and to start to use it in your daily business to try to work together with your fellow members in your markets. They may have buyers for your particular market. So that is active on the website. And play around with it. I'm assuming that if you have any questions about that, you can reach out to Jonathan, Jennifer, or Diane for some training questions, etc. I think Nathan was talking, so remind people that if you're not talking, to please put yourselves on mute. And I will try to remember to do that as well, because as we were getting set up for this, a siren went by. I'm on the third floor on 49th Street and Madison Avenue in the middle of Manhattan. So we get a lot of fire trucks, ambulances, etc. And I'll try to keep that away from you. In any event, we have in order a number of people, and I'll call upon people to present for a couple of minutes. I'm going to ask if these are properties that have been in discussion with the client for a period of time, if you could weigh in and give us a little flavor, a little color on where pricing is today, where it might have been a few months ago, what the conversation's been like in terms of talking about valuation, cap rates, anticipated yield, et cetera, in your markets, because obviously that's the big elephant in the room all around the country right now, in fact, all around the world. So with that, we'll lead off today with Scott Hensley in Charlotte, North Carolina.
Thank you, Andrew. Scott Hensley, Piedmont Properties in Charlotte. We kind of cover the Carolinas, North and South Carolina. So Advanced Auto, this is one we brought to the market in the last couple of weeks. It's actually a great client of ours. He's doing some estate planning. So that's kind of his motivation for selling. Advanced Auto corporate store, $1,375,000. At that, it's a 6.2 cap rate. And the kind of kicker on it is they have which is not on this, but their lease expiration is in 2026. So in 3 years, they actually have a catch up, and there'll be a 15% increase in their rental rate in 2026, if and when they exercise their renewal option. I've actually reached out to Advanced Auto and started some discussions about maybe a blend and extend, just to have that as another option if somebody would, maybe trade off some return for a longer term lease. So I've had some discussions on that. And if nothing else, has been positive that they actually want to have those discussions. So you can't guarantee they're going to exercise their renewal in 2026, but I think it's a good indication. Andrew, you talked about just in general comments about, the market. I feel like on this single tenant net lease stuff that, before interest rates started rising, everything was a 5 cap. I don't care what it was. If it was 1 year left on a term or 10 years, everybody thought their property was a 5 cap. And we're at a 6.2. We've actually had some offers, and I'll tell you that, when you got a debt constant of somewhere between 6 and 6.5, maybe higher, it's a stretch to find somebody, especially new money, to come in and buy some at a 6.2 or 6.5. So I think that's been the challenge. I will give me another 30 seconds. I'll just throw this out at you. We do a lot with IPX 1031. I don't know if you guys are familiar with them. I had a conversation with Whitney Brennan, who we use often, just try to get a sense for what she's seeing on the 1031. She goes, Scott, we're probably an anomaly She goes, my office in the Southeast is still pretty strong. She goes, but we talk nationally and the 1031 transactions are down. She said January, December, they were off about 25%. She goes, we have had an uptick here recently. And the other thing I take away from that, and we're actually involved in 3 different ones right now. She said, we're seeing a lot of creative owner financing to get deals across the finish line. So I would just throw that out at you, as you get to that impasse, start exploring maybe an owner financing. So I'll leave it there unless anybody has any questions.
Any questions anywhere?
Hey, Scott,
If not-
what was the term again on this group for the advanced auto parts?
Yeah, so Phil, they've been in there since 2004. Their current term expires in August of 2026. If they exercise their renewal option, it's a 15% increase on that. It's $84,000 a year now income. It's a good client of ours. The only reason he's selling is because of estate planning. It's a great little deal. It really is. Like there's really no hair on this thing. But again, I feel like it's probably going to take some exchange money, put new equity into a deal. The numbers just don't really work for most people. You got to have some really patient money for it to work. So.
Great. Thanks, Scott.
Thank you, Scott. Next up will be Jeff Falconer out in Portland.
Hey guys, got a single tenant building as well. It is a long-term client of ours, Women's Healthcare Associates. A bunch of the doctors decided they wanted to own and build a birthing center next to a clinic. So this was an old Mexican restaurant, fully gutted it, fully rebuilt it inside and out. So it's a brand new Class A medical building. The birthing center unfortunately came online right at COVID. And it never got going and got traction they wanted to. So there is about 3,000 square feet of vacancy. It's about a 10,000 foot building. They would master lease, back to this, owners massaging the leases to attract investors. They'll lease, their clinic is doing great. They'd love to stay there forever. So the clinic, they would do a 5, 7, 10-year lease on that. And then the balance of the space, they would master lease that. They like to control the tenant that goes in there anyway. So they do a 5-year lease on that. We're asking 5.2, and that is also at about a 6.25 cap. It is the unique feature of this building is it's one of those old school buildings that was built when I don't think there was a sign ordinance of size, so it has a massive sign on a very busy road that you couldn't replicate today. And it's at the tip of a U-shaped retail center that has been fully renovated and is working on getting fully occupied. And it has a massive amount of parking, being that it was a Mexican restaurant and it being medical now. It has a very large amount of parking. So it as well as just a ownership change of direction. It's a great little coupon clipper for somebody and available immediately.
And the cap rate yield expectations in that market are changing as well?
Yep, very, very similar to find a deal and a buyer ready to sell or ready to close. It's a struggle. The good news with this client is they are super flexible. They've got room in this transaction to find. I tell anybody that I talk to, the first active real buyer is likely going to end up with the building. They're not going to let anybody's threshold. I mean, it's not a fire sale, but it's a realistic seller. So they will adjust accordingly. They just want it off their books in 2023.
I think a lot of people today are, if you get a live one, you don't let them out of the room.
Yep.
Before I introduce our next one, thank you, Jeff. Before I introduce the next one, I'm going to ask Jennifer, are we going to distribute this to all the attendees at the end of this? So if you've missed anything as we go along in terms of taking notes, you'll receive this at the end. So you'll have the information with anybody who you want to follow up with. Next up would be Todd Whitchurch and Will Duncan in Louisville.
Good morning, everybody. Will and I, we have a triple net investment here. It's a 7 brew building, and if none of you are familiar with 7 brew, it's a double drive-through coffee concept that if you're familiar with Dutch Brothers or Scooters, it's along the same vein there. This is a brand new lease. As of last month, it is a ground lease. And our asking price on it is $2.3 million, which equates to a 5% cap. And like everyone else has said, we're either looking for a cash buyer or a 1031 that's got to place some money. It won't work on debt. It does have 115,000 a year in income. And this is in Bowling Green, Kentucky, and there's not many better locations in the city. It's right on a main thoroughfare, almost 40,000 cars a day. Sits across from a Kroger Center and in between a Freddy's frozen custard and steak burgers and another retail store to the north. It's about a half mile from I-65. So you do get the city as well as the travelers up and down the interstate. And be a good investment for somebody if they can pay the cash.
And there
Has
is
there been reaction to your 5% cap rate?
We just put it out there, so we haven't gotten any yet.
Okay,
We kind of expect it to go a certain way, but
okay,
there is a 10% rent bump commencing year 5, so it goes to 126.5 in the 5th year of the lease.
great. And you say it's a ground lease. Are you buying the fee or are you buying the ground lease?
Buying the fee.
Okay. Great. Any questions? If not, we can thank you, gents, and I'll move on to Ryan Edwards and Cliff Jenkins in Phoenix, Tempe.
Morning, can you all hear me?
Yep.
Excellent. Yes. So we have here in Chandler an excellent opportunity to invest. It's a fully leased medical office investment that is going at a 6.75 cap rate. So competitive return there. Great price per square foot, just 173 a foot. We have over 20 tenants in the building. And the majority of these spaces are smaller in size, which kind of allows it to be somewhat recession proof as as we potentially head into a downturn here. We're often seeing tenants go into smaller spaces, or a few of them are bigger. If in the event that any of the tenants leave, there's room to kind of move the tenants around and backfill them fairly easily. Spaces are currently, the leases have been modified gross, but there is the ability to convert those to triple net leases. Each of these suites are separately metered, so there's potential for that as well. Big lot of parking, and just the location itself is probably one of the biggest selling features of this asset, just with it being in the southern portion of Chandler, close to the 202, near the 101 as well, and Chandler Mall. So great opportunity here, and expected to come off the market here shortly.
Great, thank you. If there are no questions, we'll move across
Ryan,
this.
quick, not
Go
a
ahead,
question,
Scott.
but a comment. Ryan, I would send that over to our folks at Bamboo Capital. It may
Okay.
be on the small side for them, but they still like office deals, and typically that would be in their wheelhouse. So send it to Dan Dokovic or over at Bamboo.
Bamboo Capital. Okay, got it. Thank you very much.
Great, thank you, Ryan. We'll move across state to Phil Tomlinson over in Scottsdale.
Good morning, guys. Yeah, so this is a beautiful Class A office building, 27,000 square feet. It was built out for a single tenant. The upstairs currently is what they're using now. They've decided to go ahead and downsize themselves. So we're looking for someone who wants to come in and buy the entire building the tenant who's there, they are willing to lease half or a quarter of the building at $24 triple net. So if we have someone who wants to come in as an owner user and take the bottom half, or someone who wants to buy the building and have the tenant occupying half, and then all they have to do is find another tenant, that would work for this group. The build out in this property is phenomenal. They are the only company or the only building in this area that has a backup generator. So the police and the fire department have this as their backup, just in case something happens with the city and power. Also, we're about 6 miles away from a $40 billion microchip plant that's being put in Phoenix, just off the I-17. This building does have signage off of our I-17, and they have a full kitchen. They've got multiple conference rooms. They also have a built-in studio for video and multiple podcast rooms. So if you guys have anybody who's looking for, a building in Phoenix, Arizona, that's beautiful, that's office, this would be great. Also, the cap rate that this would be going at would be just under 6.5 cap. So yeah, any questions on that, let me know. And I can send you over, we have drone footage, 3D footage, and then also a great offering memorandum that walks you through a lot of details on it as well.
Great. Thank you very much, Phil. Nice to
thanks,
see
Andrew.
you. Next up would be Doug Chaffee, Tan Frankum in the Philippines.
Hi, good morning, everybody. Yeah, we're a little bit out of the country here. So we've got 2 raw land properties for you today. The first one we'll look at here is 23 acres of raw land on the southern end of the Bataan Peninsula, right across Manila Bay from Metro Manila. The property does consist of, well, 23 acres, 557 feet of beachfront. It is currently zoned industrial, has plenty of industrial activities to the east and west of it. We have a bridge that's going to be connecting the southern Metro Manila to the Bataan Peninsula, landing within a half a mile of this site. So that's pretty exciting and is expected to heavily stimulate growth and activity in this immediate vicinity. Currently asking at doing the conversion rate at $9.70 per square foot, bringing the total for the yellow highlighted parcel up to 9.9, just under 10 million US dollar. The orange, slightly shaded, is adjacent and also available. That would bring it up to a total of 30 acres if purchased together, with the value or an ask rate of 13 million US dollars for all 30 acres. It's a really, really exciting area. We're expecting a lot of growth in that area coming up. And if we could look at the next slide. Here we have a property in Subic Bay. Again, essentially raw land. It has a small rest home installed on it, but it's kind of a temporary structure and really presents no particular issue. Here we're looking at 42.3 hectares or 104 acres. Beach frontage here is 2,600 feet of frontage. As you see in the picture there, located to the left, which is about 1 kilometer south of the property, is the Aguila Subic Shipyard. This was a recent acquisition by Cerberus Capital and is now being operated by both the Philippine Navy and the US Navy. This area is perfectly suited for heavy industrial, shift works, residential. Pretty much anything can be done at this site here. The terrain slightly slopes down to the shoreline, but in general, I would say it's fairly flat with just with a gentle gradient headed inland. Located across the bay from this property is the Subic Freeport Zone, Special Economic Zone, with lots of industry. It's been well-established area. The property is currently classified as agricultural for tax reasons, but would be easy and quick to transfer to or convert over to industrial classification. Current ask on this property is sitting at $6.5 US per foot net, or just over 30 million US dollar. And again, that is 104 acres. I have full information memorandums for both properties, giving further details on the property itself and the surrounding areas and the economics of the areas. So anybody feel free to reach out. Great investment opportunity.
Great. Doug, thank you very much. Appreciate it.
Thanks, Doug.
Thank you, gentlemen.
Next up, April Fisher of Bradford Real Estate in Dallas with 2 opportunities.
Hi, guys. April Fisher with Bradford Companies in Dallas, Texas. So we have 2 properties. This one is a flex space in Garland. Not a lot of flex space available in this area. It's very close to the interstates, as you can see, 635, which is a lot of development going on right now. This is perfect. It's about 50-50 office and warehouse. There is, one door and loading dock in the back, and then there potentially we could add more doors on the side of the building on this left side. It's light industrial, so fencing company, carpet, whatever your clients might need. And so we're quoting $11 gross on that one, and which is about $6,800 a month. It's pretty good price for that much space and, like I said, easy location. Any questions on that property?
I don't see anybody.
Okay, and then we have one more. This is another lease, office medical. We prefer to have it as an office because of the size, but it is in shell condition. The concrete has not been laid in that space, just in case a medical use comes in and wants to run water or something for like a dentist. This one we're asking $26 a square foot plus nets. And if anybody has any questions, there is an autistic therapy center, as well as Candy Skin. They do facials and things. So it's already office medical already, but like I said, we prefer an office use. So, all right, that's it.
Thank you, April.
Yes,
Appreciate
sir.
it. Next up would be Monica Pabby in Vancouver, British Columbia.
Hi, good morning, everybody. So I have this development opportunities site in Vancouver, East Vancouver specifically. This is 23,638 square feet, and the FSR in the area is currently 3.8 for market condos, which is apartment units for sale. And for rentals, we can get 3.9, which is under 12-story, commercial at grade. It is multi-use, so it could be commercial at grade, office, or residential, or however, and close to the SkyTrain, less than 1 kilometer away. What else is there? Yeah, there's very connected, 10 minutes to downtown, 10 minutes walk to stores around, or restaurants around, and a lot of other amenities. Asking price is very close to mid-30s. And for any developer who is interested in coming to Vancouver, this is an ideal opportunity. Thank you. Any questions?
Anyone? Thank you, Monica. Appreciate it.
Thank you.
And the last one we have presenting today is back to Portland with Riley Henderson.
Yeah, good morning. It's nice to be here with you all. This is I'm relatively newer to capacity and by that extension through CORFAC. So it's nice to be here and thank you guys for putting this on. I've got 3 opportunities here this morning I'm going to go through. The first we'll start with is a student housing deal that is next to Portland State University here, which is the second largest university in the state after Oregon State in Corvallis. So this is just a couple blocks from the university. It has been on the market before and it was on in COVID and it fell out of contract as they lost a lot of leases as the school shut down and everybody went back. But to now back on the market, it's 90% leased. Ownership has implemented some new utility bill backs to the tenant, being able to recapture some of their expenses. And we are offering at 20.6 million, which is essentially it's a 6 cap on this deal. Talk to you a little bit about our pro forma or NOI here is based on the 2022 to 2023 income or rent roll. They're currently in lease up for the next year. And they've got a 1 ground floor retail tenant, which is 100% leased. It is 54 units, 143 beds. And it's being sold by the original developer. So it's good. I think it's a good opportunity. It's pretty realistic numbers. You know, in terms of feedback so far that we really haven't had too much. We've been on the market now for, we've been on the market for 2 weeks. We took it first to our client list, and now we've just actually gone public, I think as of today or yesterday, in terms of going on CoStar and LoopNet and all of that stuff. So we'll start to get some more exposure on here, but this is a pretty good opportunity here in downtown Portland. So if there's any questions on this one, I'm happy to answer those. We can kind of go to the next one. And obviously on all 3 of these, we've got offering memorandums and the like. So this is just across the river north in Vancouver, Washington. This is a self-storage deal, brand new Class A facility, 4 stories. It had its C of O in July of 2022. Again, being sold by the developer here. Pricing on this is interesting. We've had this on the market for quite a while. We had a call for offers. Our original pricing guidance was 16.7 million. And that was really based on an appraisal that was provided to the ownership and by Newmark did that. And that was as a vacant building. It was 16.7 million. So that's kind of where we pinned our number at. That was, almost $400 a square foot. We've had a ton of feedback. We still get a lot of calls on this, and really the market feedback and the comps in our area are, $275 or almost $100 over on the comps, but kind of facing some resistance here where, this was built in a time when construction pricing was higher, and the cost of land in Vancouver and in our market has been going up. So I think, down the line, this is probably where these things start to trade at, especially on new facilities, but definitely a lot of pricing resistance. And I can say, on this call, I think it realistically is it's still a little high, but it's probably going to trade around 14.5 to 15 million. And it is an opportunity for it's only 15% lease. So it's really somebody who is taking this and has some expertise and can manage that lease up, or at least works with a good manager who can take this through the lease up. And again, I think we put in this slide that pro forma NOI at stabilized value is going to be about 18 million. So I think there is a good opportunity here for somebody to be able to take this down. Cool. This is the last one. This is a co-listing with Newmark. This is something that I'm less connected to, but on this, and this was brought to the buyers, or rather to the sellers by our office. They managed the lease up. They got 3 tenants in there. It's now 100% leased, 3-tenant building, 9.6 years left on the kind of the weighted average lease term for these tenants. It is really unique in that it's close to the city of Portland, but it is in Clackamas County, which offers significant tax advantages to Multnomah County. And the current sellers put about $6.1 million in renovations. Still, since they've signed the leases, which have just been in the last 12 months, the market's continued to go up. So these are below market rents at this point. So this is a really good opportunity. We don't have any pricing on here, so we're out, and I can, guidance here is it's going to be, this is something that probably would have been sub 5 cap before. It's probably going to be mid 5s, maybe potentially pushing 6. This is a real seller here. Price per square foot is going to be 150 to 175. That's going to put this in the range of mid 25 to, just shy of 30 million, somewhere in there. So we just started this process as well. So we are, well, depending on responses, we'll probably do a call for offers on this deal. But this is a really great, I think, coupon clipper long-term. Our Portland market is really land constrained. We have an urban growth boundary, and there's just not a lot of sites to build industrial in our market, and certainly nothing like this close in. And even at our price per square foot, we're below replacement value. So there's a really good opportunity for somebody to put in their portfolio and hold for the long term. The one thing to note, this one, we do not have a buyer co-op fee. We do on the other two. So if you do have somebody, that's something you have to discuss with your buyer. But again, this is, I think, this is a really unique and interesting opportunity right now at trading at a realistic price.
Great, thank you, Riley. That's quite a handful for you guys. That's good. Are there any questions of any of the presenters this morning while we have everybody? Or are there any questions or new opportunities that anybody would like to bring to the group? Any general?
Are we going to do it around the horn, kind of what the market conditions are in our respective markets?
Sure, please.
I guess I volunteered myself to leave that off. Okay. I wanted to just do a quick case study. We had a listing with Josh Gisman out of the San Jose office that we were co-listing a Taco Bell single tenant net lease. It didn't trade. The listing actually expired. Seller elected not to sell just for some family considerations. But the interest level overall on that was, strong. 199 CAs signed through the Crexy marketing portion of it, and we had a brief 10x experience as well. We got another 157 CAs signed. So demand is there. Challenge obviously was the pricing, that we were priced at a 4.7 cap, and market was probably indicating more of a 5 to 5.25. 15-year absolute net lease. So I think it's just that there's still definitely plenty of appetite out there, but it's just a matter of that appetite, converging with market expectations, with that bid-ask spread continuing to widen. And obviously that was a deal that had to be basically an all-cash buyer, because we were upside down on the debt constant based on where the lending rates were at that, based on that cap rate. Even at a 5.25, we would have still been very much upside down. So I think in general, are you guys seeing the volumes? I think that's the question for the group, right? Is we all know it's come down, but are you seeing those sellers willing to meet the market yet in your respective areas? For instance, I see a lot of offerings still from the CB folks out of Newport Beach in California, and it appears they're willing to meet the market more quickly on a lot of their listings. You're getting pricing adjustments of 15% decreases, pricing decreases, possibly a little bit more, maybe a little less. And just wondering if you guys are seeing that in your respective markets, or if maybe the secondary and tertiary markets where some of us are more delayed in reacting to that.
Anybody want to weigh in? I'm happy to give a quick snapshot on what's going on in New York, but I'm happy to let people go first if anybody wants to react. No?
Yeah, I'll chime in here, Riley. I'd say speaking for the Portland market, and I think what was just said is the echo here. There still continues to be a bid-ask spread here, and it's challenging. I remember who kind of started. Maybe that was you, Andrew, who had mentioned seller contracts and seller carries. I think continues right now for us to be a way to get things done. I've not been doing this super long, 7 years. I've never done a seller contract before, and we've got 4 deals I think going right now. That is the component of how we're getting this done. Sellers are willing to take, it seems like 5% money, 5% return, 4.5 on it, and that is more expensive than that and harder to find, at least it seems right now from what we're talking about. We've had some buyers in our market, speaking on the lending market, just have commitments pulled from them where they felt confident about that, and their lending commitment was pulled. First Republic is a big bank in our market, and they especially on the real estate side, and they were affected by the Silicon Valley stuff. So we did lose a couple of deals directly to that. So that's certainly been challenging. And I think, we continue to get calls from buyers, looking for deals. And it's, I kind of laugh about it. They're not seeing them out there right now. From the sellers that are looking for distress. We keep kind of waiting. Is that really going to happen? Are we going to see this distress? And it's still not happening. People still want to get out and liquidate and exit, but it's the cap rates haven't caught up. And if it's an owner user deal, they haven't caught up. And I guess the last thing I'd say is, our market is construction pricing continues to be a huge issue for us. We have heard that some of the subs are starting to be more aggressive for the general contractors, but it's been really hard to get things done with the pricing that we've been seeing as well. So it's challenging. It's a challenging time for sure.
I can weigh in from New York a little bit. I would say that in our market, we really haven't seen a reset in pricing yet. We anticipate a continued wave of potential distress to come to the front. We've had a couple of things trade, or we had a building that was in special service that we felt was reported they were close to losing, 515 Madison, where the lender extended. They didn't want the building back. I think you're going to find a lot of the lenders are not in a position to take back properties. So they're looking for ways to avoid that. They don't have in-house asset management capabilities at this point. We had one large deal that did trade on 3rd Avenue, 850 3rd, which just about 6 or 7 years ago was purchased for $460 some odd million. They traded before COVID, I think 18 or 19, it traded for about 420 to the new owner. So there was a decrease then. And they were in distress. They were in special servicing, and they sold it to their lender for 266. That's a very significant drop down in valuation on that building. The building itself has the first 11 floors sitting vacant. Discovery Channel moved out after their merger with Scripps, and roughly call it half the building, close to half the building sitting vacant. So that was nothing that was surprising to anybody, and the pricing may be indicative of where we're going with some of these other distressed properties. I have a client who put a large mezzanine loan on a property in the Midtown South market that was a 700,000 foot 2-building complex that was very successfully leased to Facebook as the main tenant and 3 or 4 others. They've lost Facebook now. They've lost a couple of others. My client put a close to $200 million mezz loan on the building when Facebook was being done. And that debt matures next month. The senior debt matures in 2 years. And we're playing around with the possibility of assisting on that in some fashion. Whether they sell the note at 50 cents on the dollar or they choose to go the foreclosure route themselves. But a lot of what's holding people back is the cost to release this space in a market where you have a 19% availability rate. And in our market, we're 500 million feet roughly, so 19% availability is 90 million feet of either vacant direct space or sublet space. So to get these deals done, oftentimes you need to provide, you talked to Riley about construction costs. TI contributions in a new lease today in New York could range as high as 150 to 175 a foot. And you would probably have a fair amount of downtime in this type of market. And the free rent is going to be, on any long-term lease, is going to be in excess of 12 months. So when you're talking about hundreds of thousands of feet in a property, obviously there are not that many people who can come in and weather that type of storm. So that's part of what you're finding right now. I think you're going to have a little bit more kicking the can down the road. We're meeting with a number of the owners that we're friendly with. There is a lot of money sitting on the sideline right now, waiting for opportunities to come in to recapitalize these buildings or buy the debt in some fashion, expecting to be able to come away with a significant discount to the value from 3 or 4 years ago. And it just hasn't started to hit yet. We're not quite there. And we think that the next 24 months are going to be very active in that world. And we're gearing up to get our share. I have a couple of off-market hotels that are well-heeled hotels I'm working on. I have a couple of NDAs signed, and these are coming back nicely. Several hotels closed in the COVID times, and some of the better hotels stayed open or have reopened now, and business travel and tourism are back. I was talking to Jennifer, who visited with her daughter a month or so ago, before everybody hopped on, and she was commenting how crowded the streets are, how crowded the subways were. And it's true, people are coming back, but there's still a big push to try to get people back, especially on Mondays and Fridays, because Tuesday, Wednesday, Thursday in New York is crowded. Offices are full, restaurants are full. The trains are higher capacity right now, but Mondays and Fridays are a problem. And if you're a retail establishment, having a 3-day work week doesn't quite, work as well. And so obviously rents on retail haven't yet adjusted to the new reality. So there's a lot going on in New York.
Andrew, quick question. Take a,
Yeah.
your typical midtown office building. You said it's got to trade at some discount from the high water mark. Is that 50 cents on the dollar? Is that 25 cents on the dollar? Where do you think that really needs to be? Because again, you got a downtime, you got 12 months of free rent, you got $150, and just sounds a daunting task.
It will depend on the building. And I hate to be evasive that way, but every building has its own story. We are a tale of two different markets. The trophy assets and the brand new construction, while they're giving that type of upfront concession, they're getting rents of $150 to $250 a foot for office space. So those buildings are doing quite well in spite of the fact that the cost of construction is up and the concessions are where they are. A building like 853rd with a large vacancy sold at $266 after the previous owner was at $422, and the owner before that was at $466. So you can do the math. It's not quite 50%, but it's heading in that direction in that case. I was with a well-heeled group the other day who has a big, by the way, they have an appetite for office in Sunbelt markets. They have a lot of money, but they have a building on 6th Avenue that's sitting 3/4 empty right now, with very little in the way of prospects to lease up in this market. So they've turned their attention. They would look at distress in this market. They would be buyers in this market. They'll probably part with that building in the next 12 months, I would think, and that's going to be. They bought it for 300, a little over 300 million. My guess is that's going to have to trade below 150 million to make any sense. 3/4 of the building has to be leased, and it's going to be a long slog to get that done in this market because it's not a great building. It doesn't have, it's not a high rise. It's got deep floors, so it's got some disadvantages. The neighborhood it's in is not quite prime. It's 2 blocks from where it should be. The main entrance sits next to a 24-hour McDonald's. It's, every building has its own story.
Andrew, are you seeing in New York and maybe people for the other markets, stuff that's under development, that's running out of interest reserve? Are the lenders taking those back? Are they continuing to work with the developer/borrower on those? Because I mean, those are the ones that are kind of the low-hanging fruit, near-term opportunities because of what happened with, short-term interest rates ticking up so quickly on, a lot of those deals that were indexed off of prime or, other indexes that were really volatile. A lot of those deals were 80% drawn probably on interest reserve whenever those rates started ticking up. So I don't know if you've seen that in New York, because you're talking about, kind of the tale of two markets with the new construction versus the existing.
Well, yeah, it continues to be that tale of two markets, but the difficulty with a project that hasn't yet started, if it's not a huge project and it's a well-heeled developer, it will likely move ahead because the prospects to lease up are very good because people want new product with new systems, light and air, very efficient buildings, built-in amenities, all that stuff. The bigger projects, you're not going to get the loan unless you have an anchor tenant. So that's going to be the problem. On the residential side, you've got couple of cases where you've had blocks of condos that have been purchased recently from buildings that were hanging out a little longer than they anticipated. So that's an opportunity for developers who can't develop from scratch today, but can acquire a block of apartments that they could either, since they're getting it at a discount, maybe they can sell those individually at discounts or create a building within a building, multifamily opportunity within a building that was designed as a condo. Again, New York's a big market, so you have all of that going on.
Absolutely. Thank you.
Anybody else want to weigh in on their local markets and what you're seeing?
I put in the chat, I was just curious, is anybody else seeing owner financing?
I have one right now we're beginning to work on. That's a partial interest, 50% interest with a well-heeled group, large deal, major player looking to sell their interest, and they would finance 80% of their purchase price at 4%, which is obviously below market financing. So that becomes compelling for the bigger players. But the check size here is close to 50 million, even at 80% of being financed. So, you're talking about $1 billion building.
So the percentage, you're saying it's 4%, right?
In that case, they're offering 4% because
Okay.
they know there are not a lot of buyers for that type of product.
Right.
And the seller in this case is Ivanhoe Cambridge out of Canada, major group. So they can do things many people can't do.
Okay, thank you.
Doug here with TFA. I'll chime in briefly just because we're so far removed from everybody else being here in the Philippines. Here we are certainly not in a seller's market, we're in a buyer's market for sure. Currently the US dollar, we're looking at 56 Philippine pesos to $1 US. That's down from a long time average of 50 pesos to $1 US. But our interest rates are lower than the US right now. US is, well, you guys are floating somewhere around 9%, if I'm not mistaken.
Yeah, approaching that, sure. 7 or 8.
Yeah, just under, yeah. So we're just under the 7% mark. So we're about 1 whole point lower on our interest rates here. We also haven't seen as much impact of inflation. It certainly is impacting here, but maybe not as heavily as it is in the States. I just wanted to chime in real quick on these two opportunities. These are definitely heavy industrial opportunities that are available here. Looking at folks like Maersk, any kind of shipping company, shipyard companies. And I think when we're sitting at 13 million for 30 acres or 30 million for 104 acres, I think we have a lot of opportunity here. So that's certainly worth investing and worth spreading the word. I think we have some good opportunities here. Both of these have been on the market for some time now. Both the 30 acres is much more willing to be flexible. Right now it's sitting at 433,000 and change per acre. They could certainly bring that down a bit. The 104 acres in Subic Bay, which is actually the more prime opportunity, is sitting at $288,000 per acre. It's a pretty good opportunity for big business.
Great, thank you. I don't know if April's still on. I saw Riley weighed in that they're seeing seller financing between 4 and 5% in their market. And that's not a single situation. I guess it's becoming more common, right, Riley?
Yeah, absolutely. Like I said, we're number of deals that we're working on that have that, and it feels like every 25 to 30% of the deals coming on the market right now, and the offering flyer, the memorandum are have a note that say seller financing available.
Yeah.
You just seeing short term on that, like 2 to 3 years, just to kind of bridge this uncertainty, or anything longer than that?
Yeah, that's a good point. It's kind of 2 to 3 year term.
Yeah.
Hopefully.
Hopefully, yeah.
Yeah.
I think the longest it kind of seen is 5 year right now, but nobody doing 10 year or anything like that.
Yeah, look, the people we're talking to anticipate anywhere from we're done with the rate increases to we may get 1, possibly 2 more. But there's a lot of pressure to keep the rates where they are or to start to lower them, because if they damage the real estate business too much, it's going to have a negative impact on the overall economy. So it's a big balancing act that the Fed is going through right now. So I see we're running close to the hour. Are there any other questions or opportunities that people wish to bring to the fore? Or Jonathan, anything that you'd like to weigh in with for the group before we sign off?
No, just thanks everybody for being here. We appreciate that. A great discussion. And as Andy said at the beginning of the call, this is being recorded, and we'll share that recording and the slide deck with everybody that was on the call. And actually, probably in the next member newsletter, we'll push this all out to all members so they get a taste of what they're missing. Jennifer also mentioned at the beginning of the call, we have an investment sales platform. It's pretty new, but we've got some stuff in there right now. Make sure you put your information in there so it's accessible to all CORFAC members. And I know the guys from Duncan Commercial will be at ICSC in May in Vegas. If any of the others of you will be, CORFAC will have a big presence there. So stop by the booth and use it to meet with clients or just say, hey.
Hey, Jonathan.
Yeah.
This is Phil Tomlinson. A couple things. Number one, guys, if any of you have any retail that is for sale above a 6 cap, can either be single tenant or multi-tenant. I've got 3 or 4 investors looking nationwide. If you guys have anything retail above a 6% cap rate, please send it my way. I'd appreciate that. Also, I had logged into the CORFAC intranet to add in some investment sales, although I couldn't figure out how to add the documents. It let me search, but there was no button for me to add. If you guys can just double check that, or maybe let us know the best way to add those properties,
Yeah,
that would be
so
great.
Phil, when was the last time you went in?
Early this morning.
Okay, all right. Jennifer can get in touch with you and just walk you through and just make sure we're doing everything right.
Yeah, no worries. That's all I had. Thanks, guys.
Yeah, well, thank you.
Well, thank you, everybody. Nice to see everyone and interesting discussion. I'll say it's easy to set up meetings with owners today because everybody wants to hear what's going on, and it's good for us to be listening to what's going on in their world. Doors are open. Thank you, everybody.
Thank you, everybody.
Thanks all.
Have a great day.